Over the last 2 months, Applied Materials stock has rallied 50%, doubling the move in the semiconductor index, helped by better than expected earnings and a global economic recovery that's taking shape. Joining us is the Chief Financial Officer, Dan Durn, is Senior Vice President as well at Applied Materials. Dan, it's great to have you on the program this morning. I want to start off by just kind of getting your take here on why your company has become a recent favorite here among the group. Walk me through what's changed the last couple months.
Yeah, hi, Oliver. Thanks for having us a part of the program this morning. We really appreciate it.
Thank you.
The opportunity for the company has never been better. As you look at the global economy and what's driving growth, the dependency on technology has never been greater. And as we look at the pandemic and we look at the post-pandemic world, the trends we see of adoption of technology are only accelerating. Work from home, school from home, e-commerce. The digital economy, the data economy, artificial intelligence, those trends are only accelerating, which creates an enormous amount of opportunity for us as a company and the broader industry, semiconductors. So we really like what we see as we look forward.
Dan, this recovery on the global economy, what parts of it are most important to your teams? You supply to companies and semiconductor makers like Intel, like Micron, Samsung as well. Are there regions that need to pick up the quickest? Are there industries or demand that you need to see pick up the quickest? What's most important to you?
So the great thing about Applied, and given the breadth of our portfolio, is we're very leveraged to just about every spend environment. We're poised to do well regardless of the spend mix, which I think makes us a little unique from an industry standpoint. 2019 was a great foundry logic year. 2020 was a strong memory year and a strong NAND year. As we look into 2021, we see foundry logic continuing strength, but it's going to be a strong DRAM growth year. And in each of those 3 years, 2019, 2020, 2021, our company has outperformed the broader market. So we think we're really well advantaged to outperform the market in virtually any spend environment. Again, I think that makes us a pretty unique company in this industry.
Dan, within the companies that you supply to, the semiconductor systems that you help these companies that they use to build, flash memory is still a pretty big component of that. About, from what I see, 10 to 12% of your top line, which is a little bit smaller than it's been in the past. You've diversified from that a bit, but the reason I bring that up is because a lot of investors are used to that being a place where there's volatility in the market, where there's oversupply, where there are inventory issues. What do you see right now in terms of that part of the recovery? Do you see that end users need more of these products? Are they managing their need in a way that's not going to oversupply in the short term?
Yeah, so the great thing we see in the market today is there was a period of time where our customer base consolidated, and we've got a very consolidated customer base at this point. The discipline with which our customers are deploying capital to bring supply online to meet market demand, the discipline with which the industry is operating is really strong today, and we're very encouraged by what we see. We think we're exiting 2020 with supply imbalance with demand, and we think that bodes well for the look into 2021. We think there's some investments on the DRAM side that our customers are going to need to catch up with. That's why we think we're going to see strong DRAM growth for our business as we look into 2021. But as a market, the customers are operating in a much more disciplined fashion than we've seen historically, and I'm really encouraged by the way the market is bringing supply online to meet demand, and I think we're pretty balanced with respect to this dynamic as we exit 2020.
The swing in the economy has created a pretty big updraft for your growth. You posted 25% annual growth in the latest quarter. You also upped the expectations. In terms of that kind of top line number, though, do you expect to be able to maintain that pace? I mean, we just saw such a big swing in the economy. Is that going to be hard to live up to going forward?
Yeah, so we see strong growth in our industry going forward. And again, we are set up, given the balance of our portfolio, the breadth of our portfolio, our leadership market position in a variety of the end markets that we participate in. We're poised to outperform in just about any spend environment. And as I think about third-party research, whether it's VLSI or industry organizations like SEMI, they see an acceleration in our end markets, and they see that the semiconductor industry is poised to double in the next decade. So we're going to be close to $1 trillion industry as we get close to 2030. The implication for our industry is we're at about a 40-year average of capital intensity. Our industry, as a proportion of overall semiconductor revenues, is about 12%. So we're going to go from mid to high 50s to 60 billion and 70 billion and ultimately to 100 billion in sized industry and more. So the next decade looks incredibly strong for us as a company. I think the opportunity has never looked better for us as a company and us as an industry. I'm really encouraged by what I see in terms of robust demand for semiconductors, and I only see those trends accelerating. So I would expect us to continue to perform in a very, very strong way as I look out over the next decade.
Dan, those accelerating trends in this period, we had a bizarre kind of situation where the economy ground to a halt, but the few things that were in demand were very high tech. Now, a lot of that has been more of the side of the semiconductor industry that is dealing with data centers, cloud demand. In terms of that impact of the quarantine demand for your industry, did that inflate things, or was that on a different part of the semiconductor group where your buyers are now starting to pick up in the recovery? I imagine most of your customers prefer recovery than quarantine.
Yeah. So I think what we'd say is I don't think it inflated our industry. I think what we see are secular trends that are playing out over multiple years and multiple decades. I would say the pandemic and the response to the pandemic was more an acceleration of these secular trends, not a pull forward of demand and overheating the market. I think we're on a secular trend that's going to play out over the next several decades, and I see the response to the pandemic and the post-pandemic world just accelerating those trends that have been playing out over several years. This is one of the reasons why we get so excited about what we see. The dependence in the global economy to technology, the digitization of the global economy, those trends are stronger today than they were a year ago, and we only see those trends accelerating as we look forward. So I think it's been very healthy for our industry in terms of accelerating these trends we see playing out over the next several decades. Again, we see the opportunity for us as a company better than they've probably ever looked, and we're really encouraged by that.
Dan, accelerating the trends, but not pulling forward demand. Walk me through how that works. Is that implies that there's got to be infinite demand for these products, right? Because if there's a fixed demand or a theoretical market, if you've accelerated it, you've pushed forward some. I mean, is it an insignificant amount that's been pushed forward for you guys, where you don't have to say, oh, we have to revise our outlook for 2025 or something like that? I mean, is it marginal, or is it just such a huge demand that it might as well be infinite? I mean, because if there is fixed and we accelerate it, some had to be pushed forward.
So I think I'd give you two perspectives on this. Let me start with an overall market perspective and then come back to a company specific, what we as a company are doing ourselves. From a market standpoint, I think the predominant driver of semiconductors over the last decade has been a consumer-oriented device called the cell phone, the handset. And I think what you see in the end markets is part of the data economy, chip enablement of the physical infrastructure of our world, Internet of Things. I think you see a handoff in drivers of semiconductor demands from a consumer-oriented device to what I call non-consumer discretionary spend by the largest companies exposed to the largest industries. Their ability to gain insights and data around their industry to manage supply chain, the roadmaps, the way they service customers, their ability to monetize those investments is greater today than it's ever been. To me, these companies making these investments, it's existential. You make the investment, you compete, and you win. You don't make the investments, it's existential. So you see a handoff from a consumer-oriented driver of true end market demand to a very substantive competitive, non-discretionary spend by the largest companies exposed to the largest industries. And the economic pool that the semiconductor industry is tapping into is order magnitudes greater now than a consumer-oriented device. And so we see these trends playing out over a very long period of time. We just see those trends accelerating from our own company standpoint. Given the limits that we have with respect to travel, we've got a great global footprint. We operate in all of the geographies that our customers operate in, but we're accelerating the investments in technology, the remote connections to tools in our labs, our R&D engineers, they're able to conduct those experiments remotely. They no longer have to be physically located with our tools and our systems to run those experiments. The remote connections we have to tools that sit on our customers' factory floor, the data investments that we're making so that we can get greater insights and help our customers accelerate their roadmaps and be more successful with their customers. We had a multi-decade investment plan laid out, and we see an acceleration of those investments as a result of the current environment, and that's only going to make us more competitive, not only as an industry, but also as a company. So I don't see there being this fixed amount of demand that we're seeing a pull forward in the current environment. This is a huge economic pool. When you talk about chip enablement of the physical infrastructure of this world to increase asset utilization, that is a massive economic pool that's being tapped into. And that's why we think we're seeing a multi-decade long secular trend of semiconductor demand being driven and accelerated in the current environment.
I like that phrase, non-discretionary need by companies. Okay, case well made, Dan, that the pie is so big that you can keep eating into it without it ever disappearing. Hey, just real quickly before we let you go, Dan, just real fast, any plans to scale up via M&A, or is that money that you have flowing through the company going to go more towards the shareholder side, dividends, buybacks, et cetera? What do you want to do with the excess cash?
Yeah, so the great thing is the company's performing extremely well, generating a lot of cash. We've always said our priority for cash is to grow the company, maintain a strong, healthy balance sheet, and then give all excess cash back to shareholders. And I think you see our actions reflect that. The great thing about Applied is we're an incredibly innovative company. So our organic growth opportunities are off the charts. We will complement it from time to time with inorganic opportunities when we can accelerate roadmaps, accelerate leadership positions, and do it in a way that drives value for our shareholders. But because the organic growth opportunities based on our strong innovation are so strong, the bar for inorganic growth is going to be quite high. We've already got one deal in the pipeline. We're working through the regulatory process now. Great deal. And we'll just continue what we've been doing with our excess cash. We give virtually all of it back to shareholders. We've been strong, disciplined capital allocators over time. Okay,
Dan, appreciate the explanations and the insight into the company here. High bar for inorganic deals, but we'll be watching for them. Appreciate you joining us. Looking forward to more.
Thanks, Oliver. Appreciate the time.
Dan Durn is the Senior Vice President and Chief Financial Officer at Applied Materials, making a pretty compelling case. I got to say that there's so much need for chips and tech into the future that all this quarantine bid might just be an accelerant.